All right, welcome back. It's time for the gamble as we wrap the football season. Credit to Pete Nigerian, Market Rebellion co-founder, who I think called Seattle basically from like day one we started this segment. Pete, what's going on? You feeling victorious?
Well, you know what? They played up to what you expected, right? I mean, I think everybody by the end of the year realized what a great football team they were, specifically on the defensive side of things. But it was, you never really know until it happens. And they did a great job of executing, and they dominated the game. Obviously, they kicked a lot of field goals, so they would have done much better had they scored touchdowns on those different opportunities. But still, I thought, as a defensive guy, as a guy who played defense, I was a linebacker. I got to tell you something. I love the Super Bowl. A lot of people said, well, it was kind of boring, not enough this, not enough that. I get it.
Game.
But I love watching the defensive players dominate. I love watching a guy come around the outside and get the quarterback and all the rest of it. So for me, when you get 6 sacks in the game and the defense that Seattle played, kudos to them, because every single rule change in the last 25 years goes to the offensive side. And yet these guys still dominated the game from the defensive side of the football. So really, I thought from that perspective, it was pretty impressive. I don't want to say necessarily they have the Chicago Bears defense. I've said that many times. But I got to tell you, given the way the rules have changed, Oliver, that defense might be as good as the Bears defense in '86.
Wow. I mean, to your point, very defensive game, right? Not exactly the splashiest, most wild game, but yeah, credit to you. Identified both sides of the ball early on. I think you called both. I think you said it was basically either going to be Rams or Seattle taking it home. So are you a Winter Olympics guy, Pete? I don't know. It's hard.
Absolutely.
Some of it I'm into it. Some of it I'm not.
I'm a former skier, man. So yeah, I'm
True,
all into
yeah.
it. I mean, I go back.
Well,
to
John was in the Alps last week, wasn't he?
We got plenty of snow here in Minnesota too, by the way. So yeah, the whole skiing thing sounds good.
I was looking at some of the Kalshi stuff on there. I'm like, that world is so unfamiliar to me, and but I wouldn't even try. Is there anything that you think is liquid enough or exciting enough the Olympics to wager on, or is earnings season the more exciting market right now?
Well, I would say this. I think you're right on that call. I think earnings season is more exciting. But that being said, if I was going to go back to the sports side of things, it's still men's hockey is pretty amazing, and that's part of this whole thing. There's a couple of different sports I think that find people, find very fun and interesting to watch, and all the rest of that, including figure skating, that kind of stuff.
Sure.
I mean,
yeah.
I think people really do, kind of gather towards those kinds of things. But I'll tell you what, this earnings season's been absolutely unbelievable. When you really look at what some of the presentations have been, what some of the, what everything that they've put together is, this whole thing about CapEx has gone absolutely crazy, I think,
Yeah.
Oliver. The fact that they're punishing so many of these various, whether it's Amazon, throw Google in there, throw Microsoft, throw Meta, wherever you want to go, Google, that's a problem. Everybody freaks out over the fact that, hey, well, you know what? This CapEx is ridiculous. You know what? If you look back to Meta, who probably was leading this whole thing in CapEx when you really go back in time, I think it's been extraordinary. They've executed. They've done what they said they were going to do. And for my money, I think that they're going to continue on with that whole pace, that they're going to continue to develop everything that they are when you're talking about this whole AI space with data centers and you name it. I mean, everything that comes along with it. I think people are pretty excited about what they're seeing there. Now, the reaction, of course, with the stocks has been, well, they're going to sell it because instead of 100 billion, they said 150 billion. Take your pick, whichever one you want, whatever stock you want. But that's really what's really been pounding these stocks. And I think that this will all play out over the next few months for sure, 6 months, however long it might take. But with the CapEx numbers that they've got, I'm really pretty excited about what we're seeing happening right now with the whole movement with AI.
To your point on the CapEx selling, I feel like it's one of the best reasons for a sell-off. The fact that companies that are inventing new things are getting punished for spending so much on that invention and investment, but ultimately it is what should drive earnings. So obviously people want to be sensitive to costs, but the temporary kind of earnings volatility could be a platform for entry into the intermediate to longer term trade. I feel like one way to summarize this, Pete, is just looking at the MAGS chart, MAGS right now, which is holding on to this level of support. You better hope it doesn't break, I think. Yeah. But as long as it doesn't, I feel like this is an opportunity to buy something that has been correcting in price for months. Because going sideways is one way that you fix your P to E and make it, more appealing.
Absolutely. And to your point, I mean, this is something that's going to have to play out in front of us. We're going to be watching this thing very, very closely. Do they have some potential for breakdowns? Probably, especially when we talk about how crypto is influencing so much of the markets as well. I mean, that really is a big story, I think. And I don't know how many people have really been able to stay on top of that. But I mean, even Michael Saylor was on earlier today, and he was talking about strategy. And he was talking about how much Bitcoin and how he was going to buy even more. The guy definitely has guts. He's willing to go down there and continue to go.
Buying above market price in many cases, too.
Yeah, well, when you're coming in, I think he owned over 700,000, right? And now he just keeps on adding to what he's got. And you know what? That works until it doesn't. But for right now, it's been working. But I'll tell you what, if you look at any of those stocks, when you look at Coinbase or you look at Mara, if you look at Strategy, these things are kind of moving around based upon these investments that are in the whole Bitcoin world or the crypto world. And it's something I find to be really, really interesting. And by the way, tonight we've got Robinhood, and they have a lot of different factors that touch this whole space as well. So absolutely. I think that earnings is going to be interesting.
Totally with you on that. Great reminder there. I forgot about those earnings. My stock of the year for 2025, because of its involvement in so many things, the everyday trade, folks trading, investing, making sure they don't get left behind by AI in the market. Big tell there. Hopefully the crypto pain doesn't crush too many accounts from that standard, because if it stays anywhere down below 80,000, it's certainly going to be a slow but steady crush on Michael Saylor. I mean, below his break even, and it's some of the hopes are kind of getting dashed. If you look at some of the betting markets right now, Pete, I'm pulling up Kalshi's when will Bitcoin hit 100K, and not this year, according to Kalshi. All these hopes kind of drifting now into single digits. Obviously, price informs that view a lot. But that just kind of now gives, I think, some perspective here on it's sort of becoming this game of survival rather than get rich, which a lot of people associate this asset class with.
Yeah, I don't disagree with you. And, 150,000 does seem like a pipe dream, right? I mean, we did get up to 122,000, I believe it was.
Yeah, 127, yeah.
127. But, and then we had this big pullback, and we've continued to watch it just sort of fade and fade and fade. And like you were talking about, I mean, it's almost had a bit of a magnet towards this 69,000 level for a little while, it feels like. But the movement is there. I'm not negative on Bitcoin. I'm not, I just look at it each and every day and keep an eye on things. But when you take a look at that and you see how directly that is affecting some of these various tech stocks that are investing and so forth, it's something pretty daggone interesting. There's no doubt about that. And I know you want to, you can fry me a little bit on this whole silver thing, but I got to tell you, they're coming back for more silver yesterday.
Yeah.
So the options market, that was a big drop that silver has taken, and gold has actually hung in there pretty daggone nice, still over 5,000, doing a great job.
Yeah, gold has held on real nice.
And you look over at silver, somewhere close to 80, 82, somewhere in there, 83, whatever it might be, but it's interesting because we are seeing more option paper come back into both into the GLD itself and the SLV. And I find that pretty intriguing. As a matter of fact, yesterday, 83,000 calls. It was a call spread that they put on. And that's what you and I have been talking about. Really smart to put on these spreads because you take some of that risk off to the upside. If you had to run all the way through there, I think you'd be pretty happy anyway. So, when you've got a $15 call spread that you've done 83,000 times for $4, it makes it pretty interesting if it were to break through. And that's a February expiring option. So, it's interesting to see they are not tired of GLD and they're not tired of SLV. As a matter of fact, yesterday with SLV, the silver, that one, 25,000 of the June 120s. And another 40,000 of the June 125 calls. Both were bought.
Way out of money.
there's some size out there. They're buying some time going out to June, which I think is probably a smart move. They've done more of that with SLV than they have with the GLD. So it's interesting how they're kind of shifting around a little bit, but still they're looking for silver to be somewhere a lot higher than it is right now.
You know, that really dovetails right into what Noel and I were discussing, which is the two different kind of utilities of these things, where both have seen volatility subside in recent weeks. But for gold, I feel like that's a little bit more welcome because people kind of want it to be a less wild asset. But for silver, to your point, if volatility comes in like it has, that might just encourage some of the speculators to come in and say, all right, well, now it's cheap to take some of those YOLO calls again, cheaper than it was a couple weeks ago, obviously. But it does seem like silver is more the home of the speculator.
Yes, absolutely. I think it's a combination of that, and also on the other side of it, when you look at silver and we talk about all the different things that silver is a part of, right? From EVs to you name it. I mean, it just seems like it's everything from phones to computers. Across the map, you're going to see something where silver is in demand, AI, data centers, all of that. So that's why I think when you see a pullback in other areas of the market, part of that is pulling off on silver as well, because if they're pulling back, it's going to drag down silver. So it's a matter of what happens with a lot of these various technology side of things that's going to actually be able to give silver another boost and get it back on the running and maybe get into triple digits again in the not too distant future. I'm not predicting that. I'm just saying that if all of those different other parts of this thing start to move in a positive way, I think silver's going to be along for the ride.
Okay. It's trying to, but it's got this kind of short-term downtrend, so it's going to be tricky. Yeah. It seems like it's got to be go time soon for this thing to reinvigorate, whereas gold has been putting in the higher highs and lows on this short-term chart since the beginning of the month. So it's fascinating to see how similar they were, but then now in the short term, kind of how the two have adapted a little bit, and gold's kind of found that edge. It's just, it continues to be just very impressive gold. Pete, a few kind of out there bets that I wanted to hit with you real quick. And one is very much macro because I've been talking about Powell and the removal and the replacement, the potential for bonds to go haywire. Now, actually, that's kind of going against me today because the 10-year yield has come in fairly significantly, down below 4.2, which I didn't see coming. I thought that line of 4.2 was going to hold, so maybe I'm wrong on this. But then what's funny is that there is still a 5% chance, even though Trump said it's warish on Kalshi, there's still baking in a 5% chance that something else happens here, which is like kind of classic Trump era, who knows, until the paper is signed and the man is in the seat.
Well, and isn't that the truth? I mean, we've listened to the president many times and say something, and then not too many weeks later or even shorter time frame, maybe things change it up, right? So I think there is, and that's something that we have to recognize when we're looking at something like this with Kalshi. We're looking at, the Fed chair in this particular thing, but when you consider the fact that Mr. Trump, President Trump, does sort of backpedal sometimes and move things around and shift around, I mean, I think that's something that we all have to be very cognizant of because it is actual. It is true. It's something that we've seen right in front of us going all the way back to last year in April when we had the major issues going on with all the tariff talk and so forth. So, but he seems to clean things up pretty well at some point as well. So, it makes it that much more interesting for all of us. But I think it's going to be worse. I can't imagine what would change that would pull that away from us. But I'd still be betting on that side of things.
Yeah, for sure. It sounds like the decision has been made, but so far, the bond market remaining pretty cool about it. So, look, I mean, if I got to switch my red light on bonds to a yellow, but it means a green light on stocks, then that seems like a good trade. That I think that would be a welcome shift. If the specter of a bond blowout lessens, then I think the specter of a big stock market breakout increases. Fair?
Yeah, absolutely. I think that's totally fair. And you know what? When especially with the backdrop of the earnings season and how solid it has been, right? The only thing that's really held us back in terms of the earnings season is what we talked about earlier, which is, particularly obviously in the tech space, but when they've got that CapEx, that's what's holding people back. You basically are crushing on the earnings, crushing on the revenue, the guidance has been strong, but you're going to spend XYZ on this whole thing when you come to the CapEx. And I think that's really what has been pulling somewhat on the markets because of that and the concerns that people have about that.
Very true. Kind of how we started the earnings season, and it certainly has lingered. Pete, great stuff. Nice range, nice diversity as always on the subject matter. Thank you very much. Pete Najarian, Market Rebellion.